On this channel, we've spoken about affordability from the perspective of housing prices going up at an increasing rate. Now, that's obviously to do with asset price inflation, but that's always been the case in Australia. In this video, though, I want to deep dive into the rental side of affordability. I think it's very important to understand both parts of this equation. And in this video, I'm really going to break it down so that we have an understanding from an affordability point of view, but also the opportunities that lie with this knowledge. If you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because on this channel, we talk about real estate, cryptocurrency, and financial freedom. If you are new here, definitely go check out over the 100 videos that I've made on this video. And there's playlists to make it so much easier for you to navigate. Now, if you just smash that like button, we are able to share these videos out to the people that really need it. Now, in this video, we're talking about rising rents and it's causing a burden to a lot of Aussies. And I want to discuss how this could be an opportunity for us to learn from, but also what does this actually mean moving forward in the next couple of years? Rising rents are a big burden on Aussie essential workers, costing more than 2/3 of the weekly income in some areas. Rental property affordability crisis is hurting the people we're relying on most, with an apartment costing at least 1/3 of an essential worker's weekly income in 87 of Australia's 104 geographic regions. That's according to analysis by Everybody's Home, which calls for more social and affordable housing to end homelessness. Now, I don't think this is just unique to frontline workers and essential workers. I think it's actually felt across the board. And this is not what they're talking about here, but some of the data that I come across and I research, I can see that we have an issue because if we've got, I guess, increasing value prices of homes, we have people getting priced out. So they're now going, well, if I want to live here, I'm just going to rent. And so if there's more people going into renting those properties, now we're going to see an increase in demand for the rents, and that's increasing there as well. And so, I'm not surprised that everyone's being affected by this, but it's just interesting to see what we can actually do about it. The advocacy group used cross-referenced SQM research rent data with the basic hourly wage of workers in disability support, aged care, childcare, hospitality, and supermarkets. The calculation found rents were most expensive in the following 9 regions, where an essential worker would need to sacrifice more than 2/3 of a week's income to rent an apartment. So in New South Wales, it's the Sydney CBD, Lower North Shore, Northern Beaches, and Eastern Suburbs. Queensland has Gold Coast South, ACT, Inner South, South, Inner West, and North. And if we put this into context, 2/3 of your income going towards your rent, that's 66% of your rent money being used up by the amount you make from your job. So that means you've got another roughly 33% where you can now use that money to live a lifestyle, right? Whatever lifestyle that looks like. After you're doing your 40, 50, 60-hour work weeks, then you go and you say, well,
how much time am I actually spending in this place that 66% of my pay goes into?
Now, for context, you're probably wanting to get to a position where you can invest probably 40 to 50% of your income, and that's how you're really going to ramp this whole process of financial freedom up. But if you're now working and using 66% of that weekly income into just surviving as a roof over your head, you've got to really question where you're living, but also why are we having to pay so much? The group's spokesperson, Kate Colvin, described the rents as eye-watering and the findings astonishing. The pandemic has reminded us how critically important our carers and service workers are, she said. Yet these pandemic heroes are being badly let down by the housing system and are often priced out the communities they serve. Now, I totally agree. The frontline workers in this whole pandemic have been like the backbone of the country. Similar to the fires and the bushfires, and you had all these volunteers going in. Man, huge respect. But I don't think this is just unique to the frontline workers. I think it felt across the board. I think this is the angle they're obviously taking with this article, but it's important to know this isn't just felt in these locations. I would say that it's felt a lot more, and during a time of pandemic where I think in most of these locations you had a lot of the properties that were like Airbnbs come back onto the market, so we had more demand. Yet we've seen a struggle for paying rent, despite rents even coming down. So, let's continue. In the end, I'll give you my thoughts. It wasn't any easier in coastal and bush communities. People with big city incomes are moving to the regions and totally warping rental markets. Okay, so this is exactly what I was saying. Obviously, this is the first time I'm reading it, right? So it's a live sort of reaction and conversation. But people moving from big cities, now bringing that sort of money across into the regionals is why it's been pumping from a capital, growth perspective, but also rentals is now starting to really ramp up. And that's like the local community are now going, well, we're making wages that are appropriate for our region, yet we can't compete with guys that are coming in from the city who've been working for like 10 years there, made so much more, and now they're going,
well, I don't want to buy $1 million apartment. I can go buy a 500K property down there and I've got like land.
Meanwhile, tragic findings have emerged from research by the Australian Alliance to End Homelessness and University of Western Australia's Home to Health team, which estimate 424 people died while sleeping rough in Australia last year. However, this number is likely to be significantly underestimated because there are no national systems in place to measure data regarding homeless death. Chief Executive David Pearson said the full quantum of all too frequent but hidden occurrence must be measured and publicly reported. People are dying without a safe place to call home. The research comes as S&P Global Ratings estimates about 10% annual growth in Australian residential property prices over the next 2 years as a base case, which assumes the economic recovery will not be derailed by increased COVID infection rates, containment measures. This is a very, very important point, and I'm glad they've made it because it was part of what I was going to talk about at the end. We are looking at this and seeing the next couple of years, could we see 20% growth every year? No, I don't think it's sustainable. I mean, it doesn't take a genius to know that. However, things and markets really behave in a way that can, defy logic. And we've seen that across, pandemic happens, we've seen a flash crash and everything's moved up ever since. We are now in a period where we had high levels of unemployment, yet the stock market was at all-time highs. There's no logic there. However, that's just how markets work. And what we're focusing on this channel is how do we build financial freedom? How do we build financial wealth for ourselves in a way that we can actually go and sustain that sort of wealth, generational wealth, and help, have financial freedom for ourselves and family. So when we look at a base case, according to these guys, of 10% per year, I think it's going to be much higher. I think it's probably closer between 12 to 17%, depending on where you're looking. But if we're doing that over the next couple of years, you've got to think a 400, 500K property is going up by $40,000 or $50,000 a year. People aren't saving that much. So then your next best case is you're going to have to go and rent. So now that's going to put pressure onto the rental demand market. And I know for a fact there's, certain places I have my properties where the actual agent is like, I want you to sell your property because we don't have any stock. But I also don't want you to sell because if you sell to an owner occupier, we don't have, tenants, we've got too many tenants and they don't know where they can live in this area. They're going to have to move out. So this is a very big problem that's looming, but it's almost like we still have a chance to do something about it, which is why I keep saying the next 3 years is pretty much the only time you're going to get where you can attain real estate, where you can attain land and in good locations to then go, okay, well, the whole concept of, buying multiple properties, I think that's going to die down because we're going to have policies that need to come into place. Otherwise, you've got people that are, having 100, 200 properties and it doesn't really make sense. And so that's something to think about when obviously investing, and you want to be sustainable in how you're investing. But a base case of 10% per year is going to look very, very scary, especially if you don't attain or don't have assets right next to your name right now. We consider low interest rates, solid economic prospects, and good business and household confidence will continue to push prices higher, Director of Financial Institutions Ratings Sharad Jain said. Once immigration resumes, the growth will be possibly accelerate absent of significant changes. These changes could be increased supply of housing. We are not seeing any signs of that happening at this stage. Again, we haven't even spent time talking about immigration because I thought, with the pandemic around, we've got restrictions on lockdowns, right? We can't even go in between different LGAs, let alone having people come from overseas. But that's what's going to fuel the next part of this entire bull run when it comes to, property prices. You've got at the element of low interest rates, good economic conditions. We're in lockdowns, yet prices are still going up. That makes you really question, hey, there's a lack of supply, huge amounts of demand, and that's from both a perspective of owner occupiers, but also demand from renters. When we get immigration come in, that's a whole nother ball game, and that's where I see this sustained period of growth. The risk to reward doesn't really make sense in 3 years on, right? Now, we could be having a completely different conversation in 3 years' time, but from what I can see, the research I'm doing and trying to share that with you guys is that I think if you're going to purchase property, you probably want to purchase earlier, have more time in the market, and that allows you to, increase your rents over time because there's more demand, but you're also going to get the ability to increase the capital and the equity position you have in those properties. But if there was a widespread outbreak or a prolonged series of lockdowns, that would almost certainly result in property prices falling, Mr. Jane said. I don't agree with that. I mean, depending on what level we see, I don't think we see it worse than what we saw it in 2020. We have so much government stimulus holding up the markets. They're not going to just go,
Oh, we've done this for a year and a half. Oh, now, nah, don't worry about the property market. It's fine.
no, I don't think that's going to happen. Housing markets were obviously varied, he said, and lower growth was expected in Sydney and Melbourne apartments markets due to an absence of international students. The latest CoreLogic data shows a 30.5% gap between Australia's median house value and unit values, the biggest gap on record, with houses costing a median $797,000 compared to a median $611,000 for units. Now, this is an important point. It's the largest gap on record in Sydney, where the price between the houses and the units are at 30.5%, right? It's the highest it's ever been. So are we gonna see a trend where we see a reversal, or are we gonna see this a trend for the future? Is this going to continue? Now, in my opinion, I've spoken about units versus houses. I've got a couple of videos on the channel, which I'll link as well. But the way that I see it is we're gonna be placed into a situation where affordability drives your choices. It's already happening. So whether that's from a, I can't purchase here, it's going to be, I can't purchase and I can't rent here. So what's the next best thing? You're probably going to go into a unit. So there might be an opportunity, I think, in the next 12 to 24 months where units might actually be okay, depending on what's making them unique. I talk about uniqueness, just going out there and thinking, oh, well, it's in that suburb. Well, yeah, so are like 3,000 other apartments that are empty in that same suburb. Oh, well, it's closer to the, train station by 50 meters. 50 meters, are you serious? Like, that doesn't make it unique. And that too, 50 meters away, you've got another 2,000 available. We need to go beneath those overarching listings and going, oh, well, okay, I need to really look at what does this mean and how does this play out from both the perspective of capital growth, but also rental demand and rental growth. Guys, if you've enjoyed these videos, you should definitely go and subscribe to the channel, because a portion of you that are watching aren't subscribed. So you want to know when I drop this information, share this knowledge when I actually share them. Now, the other thing I do want to make clear is strategy sessions at the moment are booked out. Now, it's not because the website's not working. It's just because we have had so much demand. I'm needing to work out what's the best way, the most optimized way to have strategy sessions so you guys still get the value from those sessions in the most productive way and optimized way. Now, the other thing you can do is, if you want that help now, then it's going and checking out the Patreon channel. Patreon membership is basically where I'm sharing a lot more information, and we host monthly Q&As that will never come to YouTube. So it's a live Q&A. If you're interested, there's a link in the description below. Go and check it out. There's a video there. I break down each of the tiers and see if it's worthwhile your time. I hope you enjoyed today's video, and I'll catch you guys in the next one. Thanks, guys.